Welcome back to Primary Source China Investment. Peng.guo and I are here for show Q2, and we're getting some competing information about foreign firms doing business in China. On one side, we keep hearing foreign firms are turning tail, leaving China, and on the other side, we're seeing foreign direct investment is increasing all over the place. So what's the truth? So I was doing some reading this week, and I saw a number of great quotes from a number of foreign institutions, not just US institutions. So the first one, Anheuser-Busch, InBev, this large beer conglomerate, drinks conglomerate. And, Budweiser's China sales were up 17.5% in the first 3 quarters of 2021. And the direct quote from, Jan Krops is, "We will continue to invest across China as we have done for decades. This is in line with our business strategy, and we see lots of opportunities to invest in China for the decades to come." The next one up is L'Oreal. And L'Oreal is obviously a huge cosmetics firm. And their quote is, "China is the second largest market for L'Oreal Group, has huge potential with people increasing aspirations for beauty, especially with the world's largest middle income group. We believe China is investable for our businesses as always." The next up is Accenture. And this is a service company consulting firm. Samantha Zhu, who's the chairperson of Accenture Asia. China is a key strategic market for Accenture. Our ability to capitalize on market opportunity and drive digital transformation and on. The business environment in China is constantly improving and the country is fertile soil. And finally, the CEO of DHL China. DHL is part of the German Post, and their comment was, "China was and still remains one of the most important markets for DHL Express. DHL Express is the first major international express company entering China. In the past 36 years, they've invested 10 billion renminbi. So, to quote my second favorite member of Public Enemy, Flavor Flav, don't believe the hype. Yes, firms are going to come and go. Recently, LinkedIn, Yahoo, even Epic Games pulled their Fortnite from China. So I think we have to follow the numbers. What's your thoughts, Peng.guo?
I think generally speaking, right now in China, 25 sectors, 21 dominated by the foreign companies. So you will see there's a foreign companies still like a big player in China market. Like the medical device, so 95% imported from the outside of the China. So that's is a big percentage. I think locally, China get the number of the companies get increased or decreased every year. It looks like a big, but the market share as well as the firm value and the size is much smaller than the international companies.
Yeah, one of the things that came up this week, Paul Tudor Jones is a famous investor philanthropist. He has something called Just Capital. And if you look at the names on that Just Capital list, you're going to find a lot of familiar names. You're going to find a lot of those names that have big footprints in China. Perhaps not the first name on that list, which is Alphabet, but certainly Intel, Microsoft, Apple, NVIDIA, Cisco. These are the top 10 firms that are ranked by how they pay employees, how they support the community, the governments that they operate in, customers, and the environmental impact. And these are companies that are obviously US domicile, but do have big businesses in China. And that's not to say that some businesses are not doing horrible things in China, but you can be sure that whistleblowers will seek fame by outing a foreign firm doing horrible things on the ground. Will those same whistleblowers be on the lookout for local firms doing ugly things? Probably less so. But anyone who spent time on the ground has many examples of horrible behavior. This isn't an excuse, but the reality is China remains a fast-moving market with winners and losers, just as the US market is. Large multinational firms can't afford missteps. And incidentally, it looks like the largest firms in China are no longer permitted to take shortcuts either.
In my understanding, is really a lot of the China business integrated with the global economy and the manufacturers. So the China really have advantage in the manufacturing area. So
Yeah.
if you see the chart, they
Yeah,
have
that's a great
4
chart.
trillion output, but North American is 2.3 trillions. So just China really take close to the 50% of the shares of market.
But interesting, but before you go on, peng.guo, interesting about that chart is that a lot of people in the US don't believe the US has a huge manufacturing base. It's a massive manufacturing base, actually.
That's true. United States used to be a big country, a bigger manufacturing country, but right now it's still the same. It's just outsource a lot of the product line to the globally. That really bring a huge of the benefit to the United States. But unfortunately, not of the ordinary people, they didn't realize that. They enjoy the benefit, but not recognize that.
Yeah, some of the benefits. You have a lot of deflationary pressure on a lot of consumer products, and people have obviously voted. I'd rather have cheap electronics than manufacturing jobs, perhaps. But that doesn't mean there's not manufacturing in the U.S. There's plenty of manufacturing in the U.S. If you look at that chart, manufacturing in the U.S. is still a massive industry as well.
Exactly. Yeah.
Yeah. I wanted to touch on one more point. peng.guo and I put together a very small portfolio of 10 names back in July. And if you recall, those 10 names were companies that derive more than half of their sales in mainland China or mainland China adjacent, let's just say. If you look at the performance of that basket of stocks, remember, these are US listed stocks that do a lot of business in China. You have actual great performance. You have almost 12.5% performance from July 28 to late this week. If you compare that to KWEB, which is the tech names listed in the US, the Chinese tech names listed in the US, that has been decimated, down almost 30%. If you compare it to SPY, which is the S&P 500, which is basically the beta of US stocks, you get about a 5.36%. So our quote unquote China US portfolio has outperformed that. If you look at ASHR, it's also outperformed ASHR, which is the pure A shares ETF listed in the US, but reflects China listed companies. So I know that's all a little bit confusing, but for those individuals that are worried that I'm going to have exposure to China and I don't really want that, there are alternatives for you to invest in US names that do business in China. There are, a lot of people talk about Apple, but Apple doesn't do half of its business in China, but these 10 companies do more than half of their business in China.
I think this is very easy to understand it. As we know, equity
I didn't explain it that easily, though. I'm glad you understand it.
Yeah. I think equity investment, just two things, value and the growth, which one you want. Obviously, the growth is much more important than value stock, and especially in the past probably 10 years. And so where's the growth came from? The growth really came from whatever can produce the growth. So if you look at the globally, China produced a lot of the growth in those areas. Whoever get exposure to the China market and success in this market, obviously the high competitive market, and then they will get the huge benefit from the growth, obviously, and support the firm's value.
Those are going to create winners and losers regardless, right? So
that's true.
If companies are not going to go to growth, if companies are not going to and that's what every company should be doing. Every company, and even those just companies that Paul Tudor Jones puts out, those are companies that are actually doing very well. And he brought up a good point on CNBC. I was watching him. He said, companies that do good actually perform well as well. And he brought up an example of like Purdue Pharma. This is a company that maximized shareholder benefit only. And what happened? We have huge addiction to opioids and overprescribing and those kind of things. He said, but the companies that are on his just list, and we're going to put those up there, companies on those just lists actually do good, but also do well. So it's interesting. It's not about ESG, and it's not about feeling good. It's actually about the mantra of the companies.
Yeah, ESG is just a part of the entire business operations. So it's just a part. But generally, in the United States, it's really like the top large cap. They are the growth company. They are not a mature company because they have the international operation capabilities. So they can collect the growth benefit from the emerging market. That is huge, different from the other emerging market. Those are like the growth company means the SMID companies. But in the United States, definitely the big company, especially top companies, can do it like that.
It's really incredible to watch some of these large cap companies and their growth rates. It's really, really,
like
really amazing. Like Apple, like Google, like even Amazon. It's just really incredible. Well, we're going to leave it there this week for our show. Thanks for tuning in. Make sure you subscribe and stay warm. It's cold in New York.
Thank you. See you next time.